Ladies and gentlemen, Greg Michalowski from ForexLive.com. Today's date is September 29th, last day of the trading month. We're going to take a kickstart the week with a look at the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar. All right, let's start by looking at the daily chart in this currency pair. And if we take this is the euro versus US dollar, the price action this week saw a decline. That decline took the price right down to our target area right through here. This is a swing area around the 105 level. I've been talking about the 105 level as a target area going back a few weeks now on the downside after probably back here where the price started to break below these levels up through here. The 200-day moving averages swing area start to look to 38.2% and the swing area down through here. You can see the importance of this level right here. A number of different swing highs and swing lows forming this floor here eventually, which eventually moved to the upside. And when you have a floor, you sometimes return all the way back down to it, and that's what we did in trading this week. Now, the rebound over the last 2 trading days has taken the price to another level that we were looking at earlier this week that we needed to get to and through, and that included the 38.2% retracement of the move up from this low right here to this high right here. That's been no surprise as well in any of my conversations this week. And going back in time, 1.06106 is that 38.2% retracement up to 1.0635 was our low price going back to the end of May right through here and also right here as well. So we know what's above. What's above is this broken 38.2 up to the 1.0635 level. If we shift down to the hourly chart, we get another view here and a different technical level that comes in right near that 1.06106 level, and that is this 200-hour moving average. So when the price moved higher in trading here today, breaking above the 100-hour moving average, which, by the way, was the stall point yesterday. So we break above that. We break above the 38.2% retracement, and guess what? We're going to head up toward this 200-hour moving average. So that's the target. Also near this area, to make it even more exciting, is the 50% retracement. Also off the daily charts, the 38.2% retracement, and then we have these swing areas right through here, which form this swing area up to 106.16. And so there's also all these sort of reasons why the market should stall at that level, and indeed it did, and the price has rotated back to the downside. So are we surprised? No. What is the next? What do we do now for this currency pair? Well, we're in this neutral area. The neutral area is defined now by the 200-hour moving average and the 100-hour moving average below. In between sits the 38.2% retracement of the last move to the downside here. And we know all these levels up here, including the 38.2 on the daily chart, comes in at 106, which is just above the 50% retracement of this. So the story's there. And in trading going forward, we're either going to get above this level right here. We're going to move back below the 38.2 and back below the 100-hour moving average and see what happens there. But right now, buyers and sellers have battled it out this week. We started off going down, and then we end in the week moving higher. But we're back in the neutral area here for the euro versus US dollar, and that's about all I can say about that. Let's take a look at the dollar versus yen now, and hey, in trading here yesterday, we started to move back below this trend line here. This trend line was defined by swing lows right here and here and here. And then we broke below it, and lo and behold, the high price here on the corrected move to the upside did stall. But yesterday's trading was, especially in the London and European session, was up and down, up and down, up and down. We did trade lower for the first time in, I guess, 4 trading days here, which is a negative. And in trading the Asian session today, we initially saw a move to the upside. That move to the upside went near these highs right here and found resistance sellers. Also, you see this level 149.51. If I go to the daily chart and look at that, and remember this trend line right here off the daily chart, a number of different swing highs form this trend line here, here, here. You can see, and even this week here, before breaking above, the buyer should have taken the price higher. They did a little bit, and then we came back down below it in trading yesterday and closed below it. And in trading here today, what do? We reestablished resistance at that 149.51 level and started to rotate back to the downside. So going back to our hourly chart, here's the 51 level. right up here, and you can see how close the price got there, and then rotated to the downside. And where do we go? We went down below the 100-hour moving average. That's the blue line in this chart right here. And where did we end up? We ended up at the 200-hour moving average right here. That's the green line in the chart. Also near that level was the 50% retracement. So, hey, these technical levels really do work. Sometimes you got to stick a toe in the water against support with just to stop below that level. If it goes below, you're wrong. If it stays above it, you get a bounce back, or you may get a bounce back. And right now we're back above the 100-hour moving average that started this whole cascade to the downside through here. So we'll be watching that 100-hour moving average to see if the buyers can hold on. We are also near unchanged on the day as well, which is maybe a resistance above. So this might be a little fail break here. We'll see. We will see if we break back below the 100-hour moving average, and I know we have been already in this current hourly bar, so the market is kind of sort of fighting itself here, trying to figure out what it wants to do, go higher or lower. We'll use this 100-hour moving average as our barometer in trading here today. It's a little messy, admittedly, but we did do what we were supposed to do right here. And we did do what we were supposed to do right here against the high on that trend line off the daily chart. Let's take a look at the sterling versus US dollar next. And for this, we'll look at the 4-hour chart to get started. If we look at the 4-hour chart and we look at the retracement from this high, this is last week's high to this week's low, we have a move toward the 50% retracement of that move to the downside right here at 1.22673 level, and we found some resistance sellers against that level. So that's a good hold right there. Now, admittedly, the price decline is a bigger price decline, and sometimes you have to see what the last trend move to the downside. Here we had consolidation over probably a week of trading right through here before it started its move to the downside. So that was the reason why I put the high price out right through here. This is where it all started to the downside. So that 122.67 level seems to be a level that traders are paying attention. So watch that on the top side. If we move above that, that's more bullish. Now let's shift to the hourly chart here, and we'll look at it and the 67 level right here, and you can see we just went a little bit above it before rotating back to the downside. Also in play is this 200-hour moving average, and I'm going to go back in time. Just watch that green line right there. The last time the price moved above the 200-hour moving average was, or what traded above the 200-hour moving average before today, was way back here on September 1st. So the first day of the trading month, the last time the price traded above its 200-hour moving average. Well, we traded above it in trading here today, but fell. But stalled against a 50% retracement. Nevertheless, and as you can see, we're trading above and below it currently at the moment at 122.49. So watch this level. It's going to be a barometer for us as traders going forward. If the price can stay above this level, it's more bullish. If we start to fail and start to move back below the 38.2% retracement of that same move to the downside from this high to this low, then things are going to be looking a little bit more dicey. A failed break up here, the holding the 50%, so on and so forth. So we got to stay above the 200-hour moving average to keep this thing going in the pound versus US dollar. So there you have it, a quick kickstart to your trading here in 3 of the major currency pairs. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.